My dear students, welcome back to our channel. In this video, I will be explaining the Bcom second semester subject Financial Accounting as prescribed by Osmania University and other universities of Telangana. We will go through the important questions and answers one by one. Let's begin with a quick revision. Unit 2 first important short question is: define consignment. Consignment means sending goods by one person, called the consignor, to another person, called the consignee, to sell them on their behalf. The consignor still owns the goods. The consignee just sells them and earns a commission. If goods don't sell, they can be returned. Example: imagine Ramesh from Delhi makes handmade bags. He sends 100 bags to Suresh in Mumbai to sell. Ramesh is the consignor, Suresh is the consignee. Suresh sells 70 bags and sends the money, minus his commission, to Ramesh. The remaining 30 bags are either kept or returned. Easy way to remember. C for consignment, C for commission. Goods are sent, not sold, owner remains the same. Key points. Ownership stays with consignor. Consignee sells and gets commission. Unsold goods can be returned. This helps sellers reach more markets without opening shops everywhere. Next important short question is: 2. Proforma invoice. Proforma invoice is a document sent by the seller to the buyer before sending the goods. It shows the details like price, quantity, and terms, but it's not a real bill. It's like a quotation or a preview of the final bill. Example: Priya in Chennai wants to buy 500 notebooks from Raj in Kolkata. Raj sends her a proforma invoice showing the price per notebook, total cost, GST, and delivery charges. Priya checks everything and agrees. Then Raj sends the actual goods with the real invoice. Easy way to remember. Pro means before, proforma invoice comes before goods. Key points. Sent before actual sale. Not a demand for payment. Helps buyer understand costs and terms. Used for approval or customs. It's like a trial bill that gives clarity and avoids confusion later. It builds trust between buyer and seller. Next important short question is: 3. What is an account sale? Account sale is a statement sent by the consignee, the seller, to the consignor, the owner of goods, after selling the goods. It shows details like how many goods were sold, at what price, expenses, commission, and the amount to be paid to the consignor. Example: Ravi from Jaipur sends 200 saris to Meena in Pune to sell on consignment. After selling 150 saris, Meena prepares an account sale. It shows 150 saris sold at 1000 rupees each. 5000 rupees spent on transport. 7,500 rupees as commission. Balance amount to be sent to Ravi. Easy way to remember. A for account sale, A for after selling. Key points. Sent after goods are sold. Prepared by consignee. Shows sales, expenses, and commission. Helps consignor know profit loss. It keeps both parties informed and avoids confusion. It's like a report card of the sale. Next important short question is: 4. What is Dale Credier Commission? Explain. Dale Credier Commission is an extra commission given to the consignee for taking the risk of bad debts. If any customer doesn't pay, the consignee, not the consignor, will bear the loss. Example: Aman from Mumbai sends goods to Riya in Hyderabad to sell. Riya agrees to take full responsibility if any buyer doesn't pay. For this, Aman gives her extra commission called Dale Credier commission. If a customer buys on credit and doesn't pay, Ria has to cover the loss, not Aman. Easy way to remember. D for Dale Credier, D for debt guarantee. Key points. Extra commission for risk of non-payment. Given only when goods are sold on credit. Consignee pays if customer doesn't. Builds trust and reduces consignor's risk. So, Dale Credier commission is like insurance for the consignor. The consignee earns more but takes on more responsibility. Next important short question is 5 differences between abnormal loss and normal loss. Difference between normal loss and abnormal loss. Normal loss happens naturally and is expected. Abnormal loss is unexpected and happens due to accidents or mistakes. Example. Raju sends 100 kilograms of apples from Himachal to Delhi. On the way, 5 kilograms spoil due to heat. This is normal loss, expected. 10 kilograms are stolen during transport. This is abnormal loss, unexpected. Easy way to remember. Normal is equal to natural, abnormal is equal to accident. Key differences. Feature normal loss, abnormal loss. Nature expected and unavoidable, unexpected and avoidable. Reason heat, drying, evaporation, etc. Theft, fire, accident, etc. Treatment cost spread over remaining goods shown as a separate loss. Responsibility no one's fault, usually investigated. Knowing the difference helps in correct accounting and cost calculation. Next important short question is 6. Ravi consigned 100 bicycles to Ankit costing 2.500 rupees each. Ravi paid 1000 rupees for freight and 500 rupees for insurance. Ankit expenses amounted to 1200 rupees. He sold 85 bicycles for 3500 rupees each. Prepare consignment account. Let's prepare the consignment account. Given. Ravi, consignor, sends 100 bicycles at 2500 rupees each to $50,000 rupees. Freight is equal to 1000 rupees. Insurance is equal to 500 rupees. Total is equal to 1500 rupees. Ankit, consignee, as expenses is equal to 1200 rupees. Ankit sold 85 bicycles at 3500 rupees each to $97,500 rupees. Step by step. 1. Cost of goods sent. 100 bicycles times 2500 rupees is equal to $50,000 rupees. 2. Consignor's expenses, freight plus insurance, is equal to 1000 rupees plus 500 rupees is equal to 1500 rupees. 3. Consignee's expenses is equal to 1200 rupees. 4. Sales value by Ankit. 85 bicycles times 3500 rupees is equal to $97,500 rupees. 5. Unsold stock. 15 bicycles, 100 to 85. Value of closing stock. Cost is equal to 15 times 2500 is equal to 37,500 rupees. Add proportion of consignor's expenses. 1500 divided by 100 times 15 is equal to 225 rupees. Closing stock is equal to 37,500 rupees plus 225 rupees is equal to 37,725 rupees. Consignment account. Particulars amount, Rs. Particulars amount, Rs. To goods sent on consignment to $50,000 by sales, 85 cycles times 3,500 to $97,500. To freight and insurance, Ravi, 1,500 by closing stock, 15 cycles, 37,725. To Ankita's expenses 1,200. To profit on consignment, Bal. Fig. 82,525. Total 3,35,225. Total 3,35,225. Easy to remember. Goods plus expenses left side. Sales plus stock right side. Balance is equal to profit. Party popper. Let me know if you want the journal entries or Ankita's account too. Next unit 2. Long questions. First important long question is 1. Explain the features of consignment. Features of consignment. Consignment means sending goods from one person, called the consignor, to another, called the consignee, to sell on behalf of the consignor. It is very common in business when goods are sold in other cities or markets. Let's understand the features step by step with an example. Main features of consignment. 1. Ownership remains with consignor. Even though goods are sent to the consignee, the ownership remains with the consignor. Example, if Ramesh sends goods to Ankit to sell, Ramesh still owns them until they are sold. 2. Consignee sells on behalf of consignor. The consignee doesn't buy the goods, they just help in selling and get a commission for the service. 3. Commission is given. The consignee earns commission based on the value of goods sold. It can be a simple commission or include their creditor commission if they take the risk of bad debts. 4. Expenses are recorded. Any expenses like freight, loading, unloading, and insurance, whether paid by consignor or consignee, are recorded in the consignment account. 5. Risk lies with consignor. If goods are damaged or lost, normal loss, spoilage, etc., the loss is usually borne by the consignor. 6. Unsold goods can be returned. If some goods are not sold, they can be returned by the consignee to the consignor. 7. Periodic report, account sale. The consignee sends a report called account sale to the consignor, which shows details of goods sold, expenses, commission, and amount payable. Example to understand. Raj from Delhi sends 50 mobiles to Sanjay in Mumbai to sell. Sanjay sells 40, sends the money to Raj after deducting commission, and returns the remaining 10 mobiles. Raj remains the owner until they are sold. Easy trick to remember. C for consignment is equal to C for commission, control, and conditional sale. This helps you recall the 3 big ideas. It's not a sale, it's under control of consignor, and the consignee earns commission. Next important long question is 2. Arun consigned 1000 radio sets costing 900 rupees each to Mr. Balu of Vijayawada on 1st January 2019. Arun incurred the following expenses on sending consignment. Carriage 6,500 rupees, freight 9,000 rupees, and insurance 3,250 rupees. Balu received delivery of 950 radio sets. Account sales subsequently revealed that 750 sets were sold for Rs 900,00 and Balu's expenses were 3,000 rupees for carriage and for customers duty 7,500 billion rupees is also entitled to a commission at 6% on sales. Arun could get only 35,000 rupees from insurance company for the loss of radio sets. Prepare consignment AC and Balu AC in the books of Arun. Let's solve this consignment accounting problem. We are going to prepare 1. Consignment account to find profit or loss. 2. Balu's account to see how much we need to pay or receive from the consignee. Step-by-step details. 1. Cost of goods consigned. 1000 radios times 900 rupees is equal to 9 lakhs rupees. 2. Expenses by Arun, consignor. Carriage is equal to 6500 rupees. Freight is equal to 9000 rupees. Insurance is equal to 3250 rupees. Total is equal to 18,750 rupees. 3. Normal loss in transit. Only 950 radios received, 50 radios lost. Since it's an abnormal loss, claim received is equal to 35,000 rupees. Value of lost goods is equal to 50 times 900 rupees is equal to 45,000 rupees. So, loss is equal to 10,000 rupees, 45,000 rupees to 35,000 rupees insurance. 4. Expenses by Balu, consignee. Carriage is equal to 3,000 rupees. Customs duty is equal to 7,500 rupees. Total is equal to 10,500 rupees. 5. Sales made. 750 radios sold for 9 lakhs rupees. 6. Commission to Balu. 6% of 9 lakhs rupees is equal to 54,000 rupees. 7. Closing stock. 200 radios unsold. 950 received, 750 sold. Cost per unit is equal to 900 rupees plus proportion of Arun's expenses. Proportion of expenses is equal to 18,750 rupees. 950 times 200 is equal to 3,947 rupees. Stock is equal to 200 times 900 rupees plus 3,947 rupees is equal to 1,83,947 rupees. Consignment account in Arun's books. Particulars amount. Particulars amount. To goods sent on consignment 9 lakhs, by sales 750 sets 9 lakhs. To carriage, freight, insurance 18,750, by insurance claim 35,000. To abnormal loss AC 45,000, by closing stock 200 sets 1,83,947. To Balu's expenses 10,500. To Balu's commission 54,000. To profit, balancing figure 90,697. Total 11 lakhs 18,947. Total 11 lakhs 18,947. Balu's account in Arun's books. Particulars amount. Particulars amount. To consignment AC, sales, 9 lakhs, by consignment AC, expenses, 10,500. By consignment AC, commission, 54,000. By bank balance due to Arun 8 lakhs 35,500. Total 9 lakhs, total 9 lakhs. Easy to remember tips. Goods plus expenses is equal to left side of consignment AC. Sales plus stock plus claims is equal to right side. Commission and expenses go into Balu's account. Always adjust abnormal loss separately. Next important question is 3. Banu Limited of Delhi consigned 100 cases of milk powder to Sonu of Bombay. The goods were charged at pro forma invoice value of 10,000 rupees including a profit of 25% on invoice price. The consignors paid 600 rupees for freight and assurance. Consignee paid imports duty 10,000 rupees, dock dues 200 rupees and sent to the consignors a bank draft of 4,000 rupees as advance. Consignee sold 80 cases for 10,500 rupees and sent the balance due to the consignor after deducting commission of 5% on gross sale proceeds. Show ledger accounts in the books of the consignor. Let's solve this consignment accounting. Given goods sent 100 cases of milk powder. Pro forma invoice value 10,000 rupees, includes 25% profit on invoice price. Freight and insurance by consignor, 600 rupees. Consignee's expenses, import duty 10,000 rupees plus dock dues 200 rupees. Advance sent by consignee, 4,000 rupees. Goods sold, 80 cases for 10,500 rupees. Consignee's commission, 5% on gross sale proceeds. Step 1. Find cost price of goods. Proforma invoice price is equal to 10,000 rupees with 25% profit. So, cost price is equal to invoice price divided by 1 plus profit percent is equal to 10,000 divided by 1.25 is equal to 8,000 rupees. Step 2. Calculate expenses and total cost. Consignor's freight and insurance is equal to 600 rupees. Consignee's expenses, import duty plus dock dues, is equal to 10,000 rupees plus 200 rupees is equal to 10,200 rupees. Total cost of consignment is equal to 8,000 rupees plus 600 rupees plus 10,200 rupees is equal to 18,800 rupees. Step 3. Calculate commission. Commission is equal to 5% of 10,500 rupees is equal to 525 rupees. Step 4. Calculate amount due to consignor. Sales is equal to 10,500 rupees. Less, commission is equal to 525 rupees. Balance is equal to 9,975 rupees. Step 5. Calculate closing stock. Total cases is equal to 100. Sold is equal to 80. Left is equal to 20 cases. Cost per case is equal to total cost divided by 100 is equal to 18,800 rupees divided by 100 is equal to 188 rupees per case. Closing stock value is equal to 20 times 188 rupees is equal to 3,760 rupees. Step 6. Prepare ledger accounts in consignor's books. Consignment account. Particulars amount hours, particulars amount hours. To goods sent, cost 8,000, by sales 10,500. To freight and insurance 600, by closing stock 3,760. To import duty and dock dues 10,200. To profit, balancing figure 1,460. Total 20,260. Total 14,260. Sonu's account. Particulars amount hours, particulars amount hours. To consignment account 10,500, by bank, advance 4,000. By consignment account, commission 525. By balance to consignor 5,975. Total 10,500, total 10,500. Easy to remember. First find the cost price from invoice price. Add all expenses to find total cost. Calculate commission on gross sales. Closing stock is equal to unsold goods times cost per unit. Commission and expenses go to consignment account. Balance due is sent by consignee after deducting commission.